Welcome to Dot Connect Wednesdays, episode 128. Tonight, this title is the title of this episode is the pivot from AI to crypto. Um, so I'm gonna give you guys a little bit of backstory and we just gonna flow through it. We're gonna show you guys what's going on, um, what's outdated with the current financial system, historically, how the systems change and they shift every 80 to 100 years, what tokenization actually means in plain language, why decentralized finance integration changes everything and how it's actually happening right now, live in present time. And then what in the financial world is it going to look like, over the next decade? No speculation, real infrastructure and connectivity. So for the last 2 years, AI has been absolutely dominating the headlines. Every panel discussion, it seems like that I've watched, that I've tuned in, um, from small fish in a pond to all of the big players, all of the big behemoths, even governments have been having global discussions, right? And it's all been wrapped around investments, infrastructure, the buildings and all of the AI data centers that they're planning on building. And we've seen big spikes in commodities because of this, right? It hasn't been the ultimate reason, but it's been a big key component to it. Now, when I start to kind of look at things from, I guess, the bird's eye view, and I see everybody's talking about this, I start to look through what's happening, why is this happening, and I always want to dig for more. So what I started to see is if AI feels like it's the center of this technological universe, something else has to be happening. Something has to be quietly unfolding in the background, right? Something beneath the surface. It brought me to present time. So February 3rd, there was a big Ondo summit, right? And for those of you who do not know, Ondo is a blockchain, it's a Ripple partner, and they are already tokenizing real world assets, right? Now, the world's largest asset manager was in the building, right? And I mean the world's largest asset manager. This is Larry Fink, the chief executive officer, CEO of BlackRock. He publicly was on the panel speaking, and his topic was on tokenization and the digitization of financial assets. And it represents basically one of the most important transformations of our time. So I figured if he's talking about this, and I know a lot of people aren't really, they're not really versed in what tokenization is and how this thing is kind of going to play out. I'm like, let's do what we do best. Let's connect some dots and let's kind of bring this information forward. He openly was questioning the role of central banks all around the world, not just here in the United States, all digital currencies, right, of various types, many of which they're already working with behind the scenes, payment networks, and basically the overall digitization of financial assets. And I knew at that moment, like, this is not casual conversation. This is about direction. He's pushing the world in a certain way. And when the world's largest asset manager kind of speaks, you already know that there were mega conversations that happened before he got on the stage to tell people, hey, this is the narrative, this is where we're going. The transition is already happening. So let's just get started. First things first, I want to address what is structurally outdated with the current financial system that we're in, right? So we'll start with foundation. Right now, the modern financial system, it was designed for a world that essentially no longer exists. We've blown past it, right? We've outgrown it. We've expanded past its limits. It was built in the 20th century when communication was ultra slow. Paper records were essentially the standard, right? And global markets, they operated within limited hours. Nowadays, we're starting to see that commerce is running 24 hours a day, right? It doesn't stop. The world doesn't stop. Money is moving digitally now, and businesses are operating all across various time zones. So you have a lot of domestic players, they go global, they expand their reach, and of course their customer base, and now they're operating way past a standard 9 to 5, right? Now, knowing that customers are able to transact instantly in these times, that infrastructure that's beneath that activity is still processing volume in small batches. So put this in context. When you send a wire transfer, right, internationally, that payment is going to go through a multitude of correspondent banks, middle banks, right? And every single institution that touches it, they have to reconcile the balance independently by themselves, right? So one transaction has to potentially be handled by three or more entities. Every single one of those updates, there's an internal ledger that has to make an adjustment. So this is why the settlement is taking multiple days. And this is not for every transaction, but for the overarching, this is why it takes so long, because there's so many hands in a pot and there's so many adjustments that have to be made before it can be finalized and settled. Now, during those days, the capital is essentially frozen. So you purchase a stock, the settlement is happening on a delayed clearing cycle. The ownership is only updating after that whole reconciliation is done, right? And the process is complete. That system exists because exchanges historically they required physical confirmation. Now, financial markets they close at a fixed hour. I'm not a stock guy, but there's a stock bell that rings, trading is finished for the day, right? So that's a fixed time frame. That's a component of time where it can only operate and then you have to cease operation. But the rest of the world still wants to trade. The rest of the world still wants to engage in financial activities in these markets. Again, you have to remember a lot of these markets nowadays, they are able to be accessed by people all around the world. Now, the financial markets, being that they close at a certain time, that result of people wanting to continue to trade, but you can't, that's friction. That's the biggest problem that the world faces right now when it comes to anything financial. Friction. Always remember that. Now, nowadays, I'll get into this in a little bit. There is problem solvers that exist. Those problem solvers are the people who identified the problem. They came up with innovative ways. They're using technology to streamline and make all of these processes better. Now, that process in itself is a utility. Now, I'm teaching you guys this in this broken down manner because I need everybody to understand this. When you can identify any problem, you've automatically increased your value. Steve talks about this all the time. It's when you see a problem, you say something, right? The person who says something, they spoke up because they experienced something. Now, immediately, instead of just rushing to fix something, you give it thought. You actually invest in solving the problem, why the problem exists, how do you correct that so it never happens again, and then you give the resolve, right? Now, that's what a lot of these players in the digital space are doing right now. They have taken this old system and all of the problems that exist with it. What they're doing is they're building upon it. They're trying to solve the problem, but they also want to prevent it from happening. They know that there's an existing system that's full of friction, full of problems, right? And all of those problems transfer to not only businesses, governments, but they ultimately trickle down to us, the person, the retail investor, the people who are always on the front end of the transaction, right? We're the ones who get inconvenienced and we normally have to pay for the resolve. Nowadays, what you're starting to see is they're building this technology, everybody's adopting it, but we still have fragmented systems. We still have the old way and we still have the new way. Now, there has to be some sort of bridge, some sort of synergy, and there's a glue that has to happen. It is occurring right now. So, to put this all in a context, that friction is increasing cost. Bottom line, that's the biggest problem. It's all about the money. When you start looking at institutions, governments, even us, the retail investors, when we're doing anything, we always have to factor in cost. Even if you're transacting in crypto, everybody was getting into DeFi in the earlier years when I was getting in crypto, and everything was pretty much built on Ethereum, right? That was the chunk of the ecosystem. The biggest problem was Ethereum fees, right? So a lot of people were like, listen, the fees are astronomical. I can't continue to do this. I would rather, you know, alter my strategy, invest in something that I can hold, let it grow, let it materialize, and then, proceed elsewhere, right? So you had to adopt different strategies based on how much capital you had because of the cost. Now, friction also reduces capital velocity. Now, that's one of Steve's buzzwords. The way capital moves, the way capital is able to flow from point A to point B seamlessly. It's supposed to be done in this new digital revolution that's happening. It's supposed to happen like this in a blink of an eye, as quick as you send an email or a text message, right? As quick as you send a Zelle or a Cash App. It's supposed to happen instantly, but it's not. That's a big problem. Now, the third thing is it's limiting the liquidity. So when you see what's going on in the world all around us right now, you see that what they're doing is the economy looks bad. Of course, they're trying to paint a different story, but we all see it, we all feel it, right? The cost of goods and stuff, it starts to go up. The amount of capital and the access to that capital, it goes down, it diminishes. People aren't able to access the same amount of money that they were when money was moving, when the economy was booming, right? So this is why we always push people on the side of having assets, because when you have assets, you have ownership. You can then create your own reality. You can leverage those assets. You're essentially becoming your own bank. Now, capital velocity refers to how quickly money moves through a system. In the digital system, the speed is what defines the efficiency. The structure underneath that, that's global finance, and it's slower than the economy can support, right? Infrastructure itself always adapts when there's an inefficiency somewhere, right? And it has to, in order for people to kind of measure it and understand what's happening. So now that you have a overarching of essentially what is structurally outdated in the current financial system, we can move into why the financial systems historically shift every 80 to 100 years. So now this is a little bit of history, right? And I'm not going to go too deep, just as overarching. Now, financial history, it always follows some sort of long cycle, this extended cycle, if you will. We had the gold standard, and that defined one of the biggest and I guess greatest, if you will, eras of monetary discipline, right? The currency was actually tied to precious metals, to gold, to commodities, to silver. Even to this day, what I'm starting to see is we're in a commodity rush. Excuse me. A lot of people didn't prepare when they had the opportunity and the prices were low. But now that you're starting to see the economy kind of failing, everybody is rushing for a quote unquote flight to safety. As they rush into this flight to safety, you're starting to see, case in point, a dime, a 10-cent dime in 1965, it was a dime. But you know what the difference was between today's dime and that dime back in 1965? It was made out of silver, actual silver, the commodity. Now, the contents of today's dime is definitely not silver. So it's not going to hold that value. I seen a post today. Um, there was a guy who actually was pilfering through, his coin saver. He was going to take his stuff to the coin saver, but it's this big, huge piggy bank that him and his son had been saving for years. And it came from his father. So this is like a second and third generation type thing. So he passed the coins down. His son sees it and they start going through it. And his son is real big on commodities. He was a fan of silver. So he tells his dad, hey, look, I found some information about the 1965 coins specifically. They're worth something. So let's look through them. So they dump out everything and they search it. And as they go through it, they find a couple of dimes that were from that year. That was a transition year, just for context. And they made a higher content of silver in that particular dime. That dime that is only really supposed to be 10 cents, it sold for $9,600. And this was last month, January 15th, 2026. So understanding that the money that is in circulation and a lot of these coins and a lot of things that were already happening, like already being issued out that are in the hands of the people right now, it has a value to it. But the dollar that we have right now, that dollar isn't worth the paper that it's printed on. So when people talk about the gold standard and they always mention this, that's because the dollar actually had a value. You can base it on it being backed by something, right? Now it's backed by nothing, just essentially trust. Now, the Bretton Woods Agreement, this happened in 1944. This restructured global currency relationships after World War II. It basically positioned the US dollar as the global reserve currency and it was backed by gold. So now you had, as the global reserve currency, you had this dollar being utilized all around the world. This was used for commerce, this was used for trade, and not just amongst the people. This was being done especially in oil, right? Now, it given that power, that position of it being the global reserve currency, it still kind of lingers to this day, right? It doesn't have the same authority as it once did, but we're still a quote unquote superpower in the United States. Will it remain the global reserve currency? That's to remain seen. Now, in 1971, the US formally ended that gold convertibility. The dollar then entered what was called the modern fiat era. This is what we're in right now. So, fiat currency, for those of you who do not know, if you've never heard the term, fiat currency is essentially the money that you have in your purse, in your pocketbook, in your wallet. Tangible currency is the bills. It's issued by a government and it derives value from, like I said, trust and just basically legal framework rather than an actual commodity backing it. Now, every single shift that we've ever experienced, it redefined how money functioned, right? Each shift responded to something, some sort of economic pressure of that current time. And each one of these shifts created two things: winners and losers. And it was all based on one thing: understanding. We're now more than 50 years into this modern fiat era. So when you start looking at the timeline of these long cycles that I just spoke about, you're seeing global debt expanding drastically. You're seeing technology reshaping the way we do business, the way we transact with one another, especially in commerce. You're seeing capital markets being able to operate globally. Saudi just opened up an exchange where everybody in the world can have access to it. There's tokenized stocks and things like that that are already readily available, real world assets being tokenized. So you're seeing this actually happen. This is not speculation. This is not a foreshadow. Now, digital infrastructure is what is enabling that instant communication, right? The financial rails that support this whole global capital movement, they're evolving and they have to in order to match the current reality that we're in. These structural shifts, they occur whenever we have debt levels that's stretching the system. Check. You've got technology enabling efficiency. Check. You got blockchain, tokenization, distributed ledger technology. All of these things are already here. You've got institutions pursuing some sort of competitive advantage. Case in point, you had the Ondo Summit I was just telling you guys about from February, this month, a couple of days ago. You had JP Morgan, you had just every big dog, every bank that you can essentially think of. You had world leaders, you had people from all of the BIS, Bank of International Settlements, you had people from the IMF. Everybody was in the building, and guess who were the people that were being highlighted? A lot of the cryptocurrency companies. You had Circle that was there. You had Ripple that was there. You had Hedera that was there. You had USDC. So there were a lot of players that are already here. So why would big banks and why would these crypto companies be in the same room during this large, huge summit, and you have the world's largest asset lead, asset guy telling the world that we're transitioning into Wall Street 2.0, essentially is what they called it. Now, that was huge for me. Wall Street 2.0, that's telling you not only is there a huge shift that's happening, that's telling you that this is the new iteration of finance. This is what is about to happen, whether you are prepared for it or not. That pivot towards tokenization is monetary modernization. That's representing the next structural shift. This is why we always have been telling people for a multitude of years now. Skyton Academy has been around for 4 years, right? Steve and I both have been in this space since 2015. And what we've always done, even on our own accords before this was formal, we were always teaching people the future of finance before it was even coined the future of finance. When you understand what's about to happen next and you have the foresight and the vision for it, you may not be able to see all the moving pieces, but you know something's happening. That shift is more powerful enough to be able to spark something in you to say, hey, listen, this is something that I have to bring awareness to any and everybody around me. And when I start to look at how history has been playing out, you start to see the same thing has been going on for eons. There was always a situation that happened. There was always some sort of modernization that needed to occur. In the midst of all that, there was problems that were existing. And in the midst of those problems, there was people that was early, that were positioning themselves, that had foresight, and they were able to say, listen, this is what's happening. I have to bring awareness to everybody around me. In modern day times, this is Skyton Academy. The modernization, the shift that you're seeing right now is tokenization. So I'm going to tell you guys exactly what tokenization actually means in simple terms. I'm going to break this down in layman's terms. So it sounds super technical, but the concept in itself is just straightforward. Tokenization means converting ownership of a real world asset. It could be homes, it could be, it could be land, it could be property, it could be art, it could be diamonds, commodities, all encompassing, right? And all you're doing is you have a fractionalized ownership of that. The representation is digital and it's recorded on a blockchain. Now, a blockchain, for those of you who do not know, it's a distributed ledger that's maintained across a decentralized network of computers. So you have multiple players, multiple computers, and everybody is communicating with one another, right? No one central player, no one central authority. It is being governed, and the power is basically being shared and spread amongst the validators, the operators, the people of the blockchains. And this is why you have now multiple blockchains that exist. Some are way better than others. Some are integrating and working with others because they've identified that they have shortcomings, they have problems. So this is where you get what's called interoperability. This is the part that I truly love. Now, I love that word because interoperability is not just solely for blockchain. It's about the tech solving problems of the world that we're in right now. And then you have players who have their own niche, who are great at certain things. And when they know that it's better to partner with another crypto company, another tech firm, or artificial intelligence company that can scale the resolve and make things more efficient and easier for everyone, that's the key. Working together, you will always get further together than everybody just doing their own thing, trying to solve micro fractions of certain problems. So this is why I'm starting to see in cryptocurrency for the past, I want to say 3 years, this has really been prevalent. You're starting to see a lot of the utility projects that we've given, especially our 1%. Inside the academy, we have this thing called the 1%, right? So it breaks down all the projects that have real world utility, they have real world use case, they solve real world problems, and they're already working with big banks, governments, institutions, etc. And a lot of those projects, they're working together using each one of their utilities for the greater good. So as I'm seeing that, I'm like, this is why the puzzle matters. Every player serves their own part, but in the grand scheme of things, this is what they're building. They're building a new era, a new modernized structure that everybody is going to follow and work under, if you will. So with this blockchain, this distributed ledger that's happening, you're seeing each one of the transactions that people have a piece of ownership of whatever asset they have. It's being recorded, and those transactions are happening securely and transparent. So anybody can see it. Anybody who's operating on that blockchain, you can literally go find a transaction and see what was happening, when it happened, how much it happened for. Now, in banking and what happens right now in present day, you can't see that. So if you ever notice you might have a overdraft on your account, you may see itemized if you're a person that just goes into your bank account and checks. You can see, hey, this was taken out. This was a deduction. I went to, Target. I went here and purchased these things. But if there's something that's wrong and somebody may have double charged or triple charged, and you're not a person that actually goes in and you're looking at these itemized receipts, you'll never know that, right? And of course, you can log into your bank account and actually see it, but you have to wait for those things to settle. And once they settle and they actually show up on your bank account and on that ledger, you have to depend on your banking institution and everybody who works in that banking institution to see if they did it properly, if they did it correctly. But the truth is, there's a ton of errors that happen too. Nowadays, Steve calls them the D League, right? And I 100% agree. You have people that are not skilled, they're not properly trained in any of their professions, but they have the job. We have to have people at this point, right? We're not full on digital, so we still lean on people, humans. And if they're not properly trained and they're dealing with your money, but you're not properly looking after your own money, mistakes are prone to happen. And it always happens. You might see somebody get a deposit that was supposed to be 250 for 250,000, right? I just saw a news article about that, and people tried to run off with it. That was a human error that happened. Now, I say all that to say, when you see the problems that are existing, and this is stuff that we experience on a day-to-day basis in cryptocurrency and blockchain technology, and now with tokenization, you're starting to see the benefits of it is that you can see this transaction. Everybody can see this. If there's a problem, it gets identified like this. The reason being is because now you're not only working with a human system, but you actually have a digital ledger that's updating in real time. That's the key. That's the problem solver. That is going to remove a ton of friction, which then in turn is going to allow a lot of money, a lot of liquidity to be able to flow to and from instantly. Now, that's a pro. The con to that is there's going to be some people who get misplaced and displaced, excuse me. They're going to lose jobs because they're not going to be needed at a certain time. And this is not the fear monger, none of that stuff. This is just preparing you guys for how the world is being set up, how this financial technology and infrastructure is being presented to you guys. So now, knowing what this stuff does, I'm gonna use this as a real world example. Think about the United States Treasury bond. Like traditionally, the ownership records, they exist inside one of those centralized custodial systems. The transfers require middlemen or intermediaries, and then that settlement then requires reconciliation. Tokenization is going to create a digital token, is going to represent the ownership of that particular US Treasury. And when the ownership transfers, the blockchain updates instantly. The settlement happens within seconds. The record then becomes transparent and is tamper resistant. That's the key. It can't be touched. It can't be reversed. It can't be manipulated as of now. Now, they may have some kind of, different technology that they introduce. Of course, I can kind of see it. I can foresee it happening. But as of right now, it's tamper proof, right? Tokenization applies to United States Treasury bonds. You got stocks. You got exchange traded funds or ETFs that you've been seeing. Right now, you've got Bitcoin. That's a big focus. The ETF, the IBIT. You've got Ethereum. You've got Hedera. And of course, you got XRP. So now you've got four key players that are in the cryptocurrency space that all have ETFs right now. You have real estate, private credit, commodities, which are your gold, silver, platinum, copper, etc. Um, diamonds. Diamonds were just tokenized on the XRP ledger. So this is showing you in real time, real world, certain things are already happening. Now, the benefits for this, as everybody can see, it's measurable. Faster settlement, continuous trading, reduce intermediary layers, right? So less people, less hands in the pot. And then you have improved transparency so we can all see transactions. And then it expands the liquidity. It expands the amount of money in the flow of it. When the money is moving more, banks are able to make more off of it because they can still continue to do what they've been doing with this fractionalized fractional reserve banking. They're just going to digitize it. But here's the caveat. With tokenization, it's upgrading how the assets move, but it also puts you in a position of ownership where you yourself are a bank. You are an entity. So you can do the same thing. You can fractionalize ownership of your assets, things that you own. So while they're tokenizing gold and droves, diamonds, real estate, you can fractionalize actual real estate, your homes. You can break your home up into a certain um, square footage, right? Or certain rooms and say, hey, I want to tokenize this room and then put it on the blockchain. There's platforms right now that allow you to do that. Um, Realio is one, Ondo, a lot of people are moving towards Ondo right now. So Ondo is a key player. This is just a nugget, a little gem, and I'm gonna get into that next. So you're able to do these things, and this is opening up opportunities, if you will, for everybody. So this is deeper than just having information. This is it. I'm talking future, but I'm also talking present. So don't sit on your hands with this information because the earlier you are, the more understanding you have, you can position yourself properly and be able to be ahead of the curve. So everybody will be running to you, you know what I mean, for your expertise, for what you have to offer. And you're already in the game, you're already set up in position. All right. So now I want to kind of get into how real world assets are already operating on blockchain infrastructure. So, like I said, this stuff is already happening. The XRP ledger, which is one of my favorite, ledgers that exist, and they operate using distributed ledger tech. They provide a settlement layer which is optimized for speed and efficiency. The transactions they finalize in 3 to 5 seconds. So that settlement that I was talking about, that's instantaneous, that's faster than you can refresh your phone. The fees are super low. They're minimal. I've seen billions of dollars move in a transaction, just various things. I've seen oil, I've seen gold, and just money movement, period. And this is done by governments, big banks, and the network is operating continuously, no downtime. So when you start to look at this particular example, right, the XRP ledger itself, what it tells you is I have something that is fast, scalable, cheap to use, it's efficient, no downtime. This is prime real estate for what the banks are trying to do in the modern world. This solves the problem of the past. This is how they're going to transition all of those old problems to what's happening right now in real time. So when you start to look at, all right, this is the breeding ground for success that a lot of banks and stuff want to start to use. They already have a ton of partnerships and integrations and collaborations with projects that are happening right now with these banks. And these banks, they haven't even gone full force. But you have Bank of America, you have HSBC, you have big players that are already starting to tokenize, but also in their own businesses right now and how they um, basically how they handle nostro vostro accounts. That's the money that is sitting idle in those middle banks that they pre-fund. If they're already using them and these entities are seeing 15 to 35% increase in profit margins, that in itself, that's like, that's it. That's the light and shining moment for them. That's the light bulb for the banks because they want to know, hey, can I free up some capital? Can I make more money? Can we still do the things that we were doing with the old system in this new realm? And you have companies like Ripple, and it's not the only one, but you have companies like Ripple, you have Stellar, you have just a whole bunch of different companies that are revolutionizing the way that we do business. And when it starts with the people that you're doing business with, these are the guys that have the capital already. So this is why you start to look at, all right, the banks are already here. Most people aren't investing in a bank, right? You can because most of them are public, right? So you can, of course, you can get into an ETF, you can get into a stock position, etc., and you can have ownership in a company. But how do you position yourself ahead of time to say, well, these guys are working with this bank, this company is doing this, and then now these banks are all starting to use tokenization, and they're trying to use this particular ledger, right? And then you have sound bites that are floating around that you see Larry Fink on a world stage saying, we're going to have, now, I don't fully agree with this, but I'm about 80% in agreement. He said, you have everybody siloed. Siloed just means everybody's on their own little island. He said, we need to have everybody collectively come together, be able to revolutionize and update the system. We're going to digitize all the money, all the assets in the world, and we're going to be able to move them efficiently on one centralized ledger. That's the part I don't agree with. It's not going to be centralized in terms of one player just controlling it all. But I can see one ledger being used above all. And there's reasons that I laid that out earlier. Has to be something that's transparent, has to be something that's cheap, that doesn't have downtime, that's decentralized, so it's not controlled by one player, right? And then you're using a digital asset. So now everybody who's on this call, when you start to question, champ, all of this information is great, but how do I start to position myself? How can I get my foot in the game? First things first, it's always going to be the knowledge. It's always going to be the information. Because once you have the information, you then get the understanding. The understanding and that data is what's going to point you to where you can position yourself and you have discernment to navigate through all the noise. In crypto or in anything finance, you have to 100% remove emotion from it. And you have to operate from a space of knowing, high discernment, having that gut feeling. So we teach inside the academy, we teach people how to think. So once you understand the base layer, the fundamentals, you then grow and stack upon it. So when things like tokenization happen, you can start to see the play a million miles away before the rest of the world even knows what tokenization is, right? What anything being digitized is. So I'm gonna tell y'all about something that just happened today, but bear with me. So Ondo Finance, they focus on tokenizing real world assets within regulatory frameworks. So Ondo completed 2 years of review with the US SEC, right? The Securities and Exchange Commission. That review concluded without enforcement action. That was the first round of applause, and they earned that, rightfully so. Ondo secured regulatory approvals across 30 European countries. Once the SEC kind of removed their hands off, just any scrutiny that they had, they couldn't find any wrongdoing. They seen what they were doing. They weren't offering, securities that weren't registered, etc. And they knew that this was modern tech. This was one of I'm not even going to say one of the brainchilds because it really isn't him. I'm not touting and I'm not celebrating Larry Fink. I'm just telling you he's the CEO of BlackRock. BlackRock is a Ripple partner, and Ondo is a Ripple partner. And then BlackRock, Ondo, Ripple, which is the company, XRP Ledger is the ledger that it uses. That's part of the tech. You start to see that interoperability word I was telling you about earlier. You're starting to see how the players are starting to interweave and are starting to form like a Voltron, like a synergy together. Now, here's one thing. This is context. It matters. Ondo manages over $770 million in tokenized US Treasury exposure right now. And this is early in the game. So when people are thinking like, all right, champ, you're kind of far out, right? You're in the distance. Tokenization is not here yet. It's here, right? And it's happening. So on a smaller scale, and it's starting to increase rapidly. So last month, well, excuse me, not last month, last January, January 2025, Ondo launched a tokenized treasury product called OUSG, right? O as in Oscar, U as in uniform, S as in Sam, G as in golf. And they launched that on guess what ledger? The XRP ledger. And they used a stablecoin that was issued by Ripple, the company. That's RLUSD. A stablecoin basically maintains price stability relative to any fiat currency. So it enables efficient digital settlement. That integration alone, it allowed for continuous settlement and intraday liquidity. Basically, you're able to settle your transactions rapidly, and then intraday means in that day, same day. That was a huge advancement because nowadays in the current system that we're in, you're taking 4 to 7 days for one transaction to get from origin when it starts for it to be 100% completed. Boom. Now you start to see it. You start to see how this new world is starting to unveil itself. So with the intraday and the continuous instant settlement, boom, tokenization is the next piece to it. That's the next piece of the puzzle. Ondo, they tokenize United States stocks already. And right now, there's live stocks tokenized that are able to be invested in through DeFi, right? Decentralized finance, right now on Ethereum. Ethereum supports smart contracts. It is not a personal favorite of mine, but I have to cover this so y'all understand, what's going on, what's happening. Now, smart contracts, in essence, they're just programmable agreements that execute automatically when certain conditions get met. Tokenized equities are powered by institutional grade price feeds that are happening. There's another company that I didn't mention, and what they do is they're essentially an oracle. They take real world data in real time and they connect it to anything DeFi, to any of these platforms, especially smart contract platforms, just like what I talked about. So I just gave you Ethereum, I gave you Ondo, I gave you Ripple, I gave you the smart contracts. Now think who is the Oracle provider who is now being able to connect all of the real world data in real time, anytime there's an update on numbers. So when I say Oracle and I mean real world numbers, I'm talking about the updated price of gold in real time, the updated price of XRP, of Bitcoin, of Ethereum, of any digital asset, right? We use a tool called CoinMarketCap, right? Or CoinGecko. You can go on and you'll see real live price feeds that are happening. Those price feeds are an API. That API is what we see as just the price updating. So if I look at something and it says $1 for right now, and then I blink and in 5 seconds it's at $1.04, that Oracle in real time, that API just means it's working. Guess who the company behind that is? It's Chainlink. Chainlink is a part of this whole deal that just happened. Now, that Oracle is supplying the real world data to all blockchain systems. So I just connected Ethereum, Chainlink, Ripple, Ondo. Ondo is powering BlackRock. Now think about all the other players that Ondo is collaborating with and working with. I'm gonna save the rest of that for 1% because this is like big talk right here. This is where all the 1%ers should definitely be at, right? If you're a person that you kind of want to save yourself that time, get inside the academy, get the understanding first. But if you're already a little bit versed in crypto and you're advanced, you got all the foundation stuff, the 1% is going to be your thing. All right. And I'll make sure that link is down below in the description when this replay goes up. Now, understand this. I'm showing you that all of these different blockchains, like I talked about in the beginning of the call, these guys are all working together in a synergy because what they're doing is they're advancing the system that we already have been that we've been experiencing that we hate. We've all grown to hate it. We just deal with it because we had no choice, right? So now, boom, the tokenized stocks that are all right now, you're able to see those real world price feeds happen in real time. They now function as collateral inside of DeFi lending markets. So now you got even more capital at the table, less rules of the road. You have, and I'm not telling anybody to invest in DeFi, especially if you're not versed in it, because you will get cooked. I personally have took substantial losses in it. This is why we don't push it inside the academy. We just bring awareness, right? We never push anybody into DeFi. Everybody who's a member in the chat, I see y'all going crazy in the chat. Big love. But y'all know this is why we do what we do. We would rather educate than set you guys up to run into a burning building, right? Especially in this early stage. It's just not safe. Now, when you start to look at what all this means, what is this kind of tying together? This is telling you that you're now able to secure loans in a non-traditional way. I don't have to go into a banking institution and say, hey, listen, I need $20,000. I have to put up my house. I have to give you so much information, my bank statements, proof of employment, etc. Right? All of those things are now a thing of the past, but the products never went away. They're never going to go away. They're just going to revolutionize. They're going to adapt the same way we are to this new system, right? So as they adapt and you're starting to see all of these pieces start to come together, you start to say, damn, you know what? I'm buying assets because I'm a member of Skyton Academy. Now that I have assets, damn, I can access a loan. And I can access the loan by leveraging my assets. Hello, what does that make you? That makes you your own banker. You're now doing the same thing that most people pay some guy who got some kind of certification to do. You're doing it yourself, but you're doing it for the future of finance. You're doing it in a revolutionized manner. And this is the future that's happening right now in present time. So I brought up that information about Chainlink and Ondo and those tokenized stocks happening right now because that is giving validity to what's happening. Like as you start to see more advancements happen, you're going to start to see more cryptocurrencies get into tokenization. You're going to see more banks partner with crypto companies because of tokenization. You're all starting to see this. So this is what's going to give value. This is what's going to give more spotlight, more capital, more inflows to the same digital assets that we've been telling you guys about on 127 previous dot connects. The information is all there. It's up to you if you got the time to go sit back and watch if this is your first episode tuning into us. I want to formally welcome you. All right. But understand when you're able to secure capital and you're able to secure loans based off assets, that is new infrastructure. And then you're starting to see new players, right? Euler Finance. I'm just throwing out a couple that you guys can research on your own time. Euler Finance, they're a part of that infrastructure with the vaults, partnering with Ondo and Chainlink. And you can look into a company called Centaura. Centaura, they are poised with doing risk oversight for these different type of loans and collateral backing. Now, this news in itself, this marks the first time that tokenized US stocks operate actually as collateral within an Ethereum-based ecosystem, right? Especially in DeFi. This has never happened. So this is like big news. This is a big advancement on the Ethereum side. But this just really just confirms what we've known for the longest. The future of finance is going to be 100% digital. So everybody who is still leaning on the fiat system is going to be here for a little bit, but it's not going to be here for a long time. And that transition, it can happen in a blink of an eye, especially in the current state that we're in. So you have to be positioned, you have to be aware, you have to be properly informed. All you have to do, get into the academy. This is what we do on a normal. All right. So before we get out of here, what I want you guys to understand is This is the last part. How this position knows who understand it early. So understand one, structural change that is going to create the leverage. Once you have the leverage, you're pretty much golden. At that point, it's just like breathing. It's going to be second nature to you. Now, I'm not guaranteed any particular outcome because everybody can get the same information, but they can have different outcomes relative to how you're perceiving the info. But all in all, having the info creates that leverage. Whenever financial rails get upgraded, capital is eventually going to flow through there. The first mover is what we always used to call first mover's advantage. It's typically institutions, and it's the early thinkers, the people who understood it first. Then you get regulation, and regulation is what adapts gradually over time. People have been talking about banks and institutions since I got into crypto, 2015. Everybody has been mentioning about collaborations, and because the first project that I got into was XRP, everything was about banks. Everything was about the speculation of working with said banks. So I've always known, from my understanding, to watch the banks, watch how they move, watch the projects and things that they're doing because it's telling you something. It's giving you insight to where they're headed, what's on their brain. And if you basically follow what the banks are doing, the bank never loses, or does it? Maybe. So infrastructure matures quietly. Doesn't make a lot of noise. You see new laws, you see new payment rails, new integrations, new partnerships. Those things open the doors to more money moving. And it's not a United States thing. Most of the people that are a part of the academy, because you live in the United States, you have to think broader. You have to think outside of yourself. Because we're experiencing something here, it doesn't mean that it's the same way in other nations. And what's happening is they're starting to see that these problems, they are mirroring themselves around the world, but everybody's not having the same experience. So in order to fix that, let's adopt this new technology. Let's adopt these new payment rails. Let's all work together and collaborate so that we all can be able to have a shared experience. Things can move faster. Banks can make more money. People can get their funds and do their transactions and things that they need to do quicker, faster, etc. Right? And cheaper, more efficiently. That's the biggest thing. So as you're starting to see that, now you have to look at public awareness. Public awareness is the key. It always rises later. This is when the herd, this is when you hear of the masses, right? They always come last. The first movers are the people who understood early. Those who study systems early, you develop literacy before the rest of the world has consensus on something. This literacy is going to enable everybody to have better risk assessment, smarter allocation decisions, right? Being able to put your money in different places, diversify it, spread it across different metrics and different assets, utilizing it different, having different strategies. You have stronger long-term positioning, greater confidence in times like this. We have volatility. The market looks wild in the crypto side in the last 90 days. But everybody who has that great confidence and everybody who's been here, you've experienced that volatility. You know what it feels like to see your portfolio maybe up, 100,000, 200,000, $1 million, whatever. You've also seen certain times within that cycle where you see it, you might be down $1 million, $5 million, 100,000, $500. Everybody's situation is different, but you've seen the ebbs and the flows, the ups and the downs. Market cycles are always going to fluctuate. Infrastructure builds forward. It doesn't care about the short-term volatility. It's always thinking super far out, 10 years, 20 years, 30 years out. So when you start to look at the overarching, everybody was just focused on artificial intelligence for one key moment. And there was a lot of great things that came out of that. A lot of platforms, ChatGPT and etc. Things were helping new people who got into commerce, who got into business. It's kind of helping them. It's a assistant for them, right? It's enabling them to have better systems, etc. the biggest thing that I've learned through working with Steve and just automation, I mean, artificial intelligence is automation, right? Being able to duplicate yourself to perform certain tasks. So I see why everybody was pointed towards artificial intelligence, and it's not going away. Don't take this title and what I'm talking about as AI is just out of the window. But just understand you're having the biggest players, the big dogs in the room tell you that the shift is going to be no longer about artificial intelligence, but it's going to be about blockchain. It's about um, distributed ledger technology. It's about tokenization. They're talking about stable coins, and they're talking about the rules of the road and the laws that they are waiting for. They're pushing urgency and they're giving signals to all the other big dogs that's in the room. So when you see Larry Fink saying this on the stage, he's not in a room with Josh and Jacob and you know Nene and whomever else. It's not just a around the kitchen table conversation. This is a conversation that's happening with the biggest players that have the access to the biggest bags of capital that are controlling how money is moving, how debt is being handled, how debt is being offered, right? How access to capital is being offered. This is the realest time in history that I think people need to give focus to. Eliminate all the noise because you're seeing blockchain improving settlement and transparency. You're seeing stablecoins improve liquidity, people having access to more money in a digital format. Now they have laws and executive orders saying that we're all going to have digital wallets. That's not by a mistake. That was foreshadowing many years ago that we're just walking into the reality of today. Tokenization is improving capital representation. Together, they're all forming the next financial operating system. Those who understand that architecture and operate with clarity, clarity creates conviction. Conviction supports decision making that's disciplined. This moment represents a generational pivot from surface level tech headlines that you're seeing all over the place to foundational financial infrastructure transformation. The rails are being updated in real time. So understanding that upgrade today, that's what creates the advantage for tomorrow. So I'm gonna take y'all out. The pivot from AI to tokenization, it just basically represents a shift in the focus from surface level tech to foundation infrastructure. Artificial intelligence, it's changing productivity. It increases efficiency. We get it. We see it. We use it. It's integrated into our business, right? So we know how this thing works. We know the benefits of it. We also know the cons of it. Nothing beats the prompter, right? You feed it something terrible, it's going to give you a result of something that's terrible. I know firsthand. You give it something great, you give it vision, it's going to give you something great back, and it's going to streamline that process for you, which will then in turn kind of help you turn on that flashlight. It'll create more ideas. And I've experienced that side of it as well. Tokenization, though, as I see it now, it's changing ownership. Ownership defines wealth. We're watching the financial rails be updated in real time. Tokenized treasuries right now are live on crypto blockchains. Tokenized stocks are live. Hello. Collateralized equities inside decentralized finance are live. Institutional grade price feeds, oracles right now are live. Stablecoin settlement layers, RLUSD, USDC, even privacy stablecoins, they're all live right now. The future of finance is operating continuously. It doesn't stop because the market looks like it's on a downtrend. Understanding that future today is always going to create that leverage for tomorrow. Understand, inside Skyton Academy, we study these shifts deeply. This is why we do what we do on .Connect Wednesdays, on our members-only live calls, inside the courses and the curriculum. We break down macro developments, regulatory evolution, digital asset infrastructure, and all of the systems that's shaping the next era of this financial era. This is going to be not only your present reality, it's going to be your future reality, but most importantly, your families, your children's. If you don't understand this stuff, and you know in your spirit that you need to understand this is why Skyton Academy exists. We welcome you all with open arms. If this is what you want, the structured insight, real education, community focused on understanding how money evolves, you're welcome to join us. We got a 7-day trial right now for $1. And after that, membership's $50 a month. So again, the rails is changing, capital is flowing. Those who understand that and they understand it early, you can move with confidence. So that's going to conclude Connect Wednesdays, episode 128, the pivot from AI to crypto. Hope you guys enjoyed this. Everything you guys need will be in the replay description down below. And we'll see you on the inside of Skyton Academy. All right. Big love, y'all. Peace.